Jeff Bunder, Global Private Equity Leader, Ernst & Young. Jeff, thanks for joining me. I appreciate you sitting down today, talking a little bit about the private equity markets.
Sure.
So, I guess let's just start off and talk about how you guys just put out a study talking about private equity is adding value to these companies and to the economy as a whole. Share just some of the findings with us.
Sure. We've been doing our study in the U.S. and a companion study also in Europe for the past 5 years. Essentially, we drill down into exits of private equity-backed companies and look at not only from a performance standpoint how they did, but more importantly, what are the levers essentially that have driven performance. We've seen quite a number of exits over the past sort of year and a half, and it's given us a significant population to look through. And essentially what comes out of the study is it's no longer, from a private equity standpoint, enough just to buy a company and allow sort of management to grow the business. There's a lot more that goes on in terms of private equity funds being involved in the portfolio company plans and figuring out sort of, again, what the levers are to create growth opportunities.
Well, what were some of the levers that you were able to find that are creating those growth opportunities?
Well, I think first and foremost, it starts with the management team. So I think, if you have a great management team and they're incentivized properly, that's the best from a lever standpoint in terms of judging for performance. Other things though that factor into it is, and I should say from a management team perspective, it used to be all about the CEO. And what we're finding is there's a lot broader management team now that provides value at the end of the day. It's not just the CEO, it's the CFO, it's the COO, it's the, in certain cases, the chief of marketing officer or others. So it's a broader group now, largely because business is complicated, particularly in this environment, and we find that the sort of emperor CEO, while they still exist, not necessarily the recipe for success that it used to be. Yeah, so to sum up, management's the key.
And how much interaction then should those PE, those private equity portfolio folks, be having with that full management team on a regular basis?
It's interesting. They all differ. And what we've seen from a private equity perspective, a lot of the larger private equity funds have now formed portfolio support groups, operating partner models, operating consultants. And we're starting to see that more in the middle market funds as well, where they're bringing in either operating partners or some form of an operations team. So in the past, the traditional private equity model was you invested in a business, the private equity deal professional sat on the board, and they effectively managed through that mechanism. What we're seeing now is these operating partners or portfolio support groups are involved day to day with the business, and not to run the business, but to help the management team with all the challenges they face execute on what's usually a pretty aggressive growth plan.
Jeff, those support teams, are they typically comprised of folks from within the private equity group, or are they cross-pollinated from management from the different portfolio companies?
Yeah, they're typically acquired externally and tend to be either former executives from large corporates that are out there. Traditionally, it's not the typical deal professional, so it adds sort of this new element, new set of tools in the toolbox for PE to have a large group of in some cases executives that have been in particular corporates. And what's also sort of changed and came out in our study is a lot more focus on industry, and that plays right into it because you want to get a top executive who used to be at a large corporate, focused on a particular aspect of a sector, and bring them in so they not only have that depth of experience, having in some cases run a business or have been part of a large management team, but also that they know the sector.
Interesting.
So they can bring that sector expertise as well.
You talk about sectors. Are you finding that more of these private equity groups are focusing on only a handful of sectors, or they're being very diversified in terms of their portfolios to be in biosciences or IT or managed services?
It's interesting because it's certainly changed. I mean, 10 years ago, you had a number of funds that would, I think, characterize themselves as generalists.
Mm-hmm.
And what's evolved over the last 10 years is a lot more of a focus on sector. So they certainly look at certain sectors. I think most of them would say we can't cover all of them.
Right.
I think they started with, okay, let's have as wide a lens as possible and go after 10 or 12. And I think what you're seeing is a lot of them are narrowing it down to 4 or 5. And what's also happening is that the bigger funds tend to even go out and raise sector-specific funds. So the Carlyles, Blackstones will go out and raise money for a real estate fund or an energy fund. And we continue to see an evolution at the top end of the PE fund class, where they're looking at sector-specific funds and essentially bring on a whole separate team.
Interesting.
To run that.
And one of the things that's come out is the growth of the IPO market, that a lot of these PEs are now converting and going through the IPO market as that exit.
Yes.
How do you feel that IPO market is truly reflective of what's happening in increased performance in the PE sector?
Well, I think you have a sort of, and if we think back in the last couple of years, you have a sort of an interesting time because
Mm-hmm.
you have the IPO market used to take companies public that are, tech companies that are traditional type IPO businesses. But then you've had the Dollar Generals out there and, Nielsen and Dunkin' Donuts, different types of companies that are PE backed, that have done well, that are taken to market, tend to be at the higher end of the market in terms of valuation, size. So it's clear, private equity is clearly using IPO as an exit. They've been pretty successful, albeit it's a tough market.
Mm-hmm.
So right now, today, I think most would say it's very difficult to take a company public. It's got to be a unique situation and circumstance. But that doesn't stop them from preparing,
Mm-hmm.
because the view is we're in a volatile market. It may not happen today, it may not happen next week. We'll prepare because we think we have a best-in-class company that we can now take to the public markets. And their view is there's not enough of them out there. So if you have them, the investor demand will be there.
Yeah, you mentioned the ones you went through all were top of class in various niche sectors that were not technology related. Do you feel that that's that, and I talked about this yesterday in the panel, that you can't really time an IPO,
Right.
that you have to play the hand you're dealt. Do you think that for companies that are not, let's say, that best in class in that one specific sector, that they still should be considering the preparation for IPOs, the S1s?
I think some of them will, because I think, again, it depends how broad the investor demand is. I think as we heard yesterday, there's an ebb and flow, and the difficulty is that demand may be there today and not tomorrow.
Right.
So I think while companies will sit there and certainly look at IPO as an alternative, I don't think they rely on it as a single alternative. So they'll also think about an outright sale to a corporate as equally, in my mind, equally as good an alternative if they can find it, as well as just continue to run the business. And I think the third strategy, which doesn't get a lot of attention, is to go out and just look at the marketplace, and there seems to be quite a number of businesses out there that maybe don't know how to get to the next level or evolve, and private equity will use these businesses to acquire other businesses that may not be performing that well in this environment because it is tough. So they'll look to continue to add on and essentially grow to a size that is more attractive, either again in an IPO or to a corporate out there. So they continue to sort of, from a PE perspective, continue to sort of work through the different alternatives to see how best to exit. Because the private equity fund, unfortunately, I think, just can't hold on to a business no matter how good it is or the prospects are. There's a timeline.
Yeah,
there. So they continue to have to look at ways to exit.
Do you think there's more of a niche specific or more of a specialization where you get the platform company and the add-ons that really add value to the company, like Michael said this morning? Acquisition is nothing unless you integrate it and use it to grow the company as a platform. Do you think that's really where a lot of the PEs are headed these days?
I think they certainly, it comes up a lot, because even though we're in this, what's interesting is we're in this sort of environment where everyone would sort of look at it and say, it's low growth, we have bad news coming in weekly, but yet some of these businesses are performing well in the market, and particularly ones that are up for sale, very competitive. So from a PE fund perspective, They like the environment. They think they can be opportunistic, but they look at it and say, well, you know, just a typical business and going in and doing an LBO, it's very competitive and the prices are high. And I think a lot of the Ps look at it and say, well, as an alternative, what if we, you know, in a particular niche sector, go in and acquire a business as a platform and build it up. Very difficult to execute, as you mentioned. And you know, there's a lot of corporates out there that they talk about how great, you know, they've been in terms of acquisitions, but it's really difficult from an integration standpoint to make that all work. It's not just blending the operations, but making sure if you have a management team you're bringing in, they can fit into the culture. Make sure if you want, you know, you have geographic expansion, that you make sure you're setting the platform for a company overseas in an emerging market. You may never have been there before. So there's enough challenges there, but I think from a PE perspective, the model is flexible enough that they can certainly make this work relative to a corporate that may be large, bureaucratic, and trying to bring in an entrepreneurial business into their culture. Somewhat difficult. So I think from a PE perspective, they tend to have that transformational view. When they buy a business and tinker with it, they'll bring in others, add on additional businesses, and that sort of fits into the model, if you will.
Interesting. Tom Adams said something yesterday that caught my attention. He said that PE likes volatility a little bit more than the public market because it makes the companies more interesting. What's your take on that?
Yeah, it's, you know, there's been a lot of discussion and just public debate around where PE plays in the right environment. And it's interesting that the volatility, you would think, would scare a lot of folks, particularly environment, as I said, where there's, you know, there seems to be a lot of demand for good businesses out there. I think PE looks at it and says if there's volatility out there, it potentially reduces valuations. And essentially, I think when PE cuts through it and does, you know, the typical diligence, they have a good, you know, typically have a good track record of finding business opportunities there that, you know, you may see short-term volatility, but they know over a longer term that, you know, the business has a real good chance of outperforming.
Makes sense.
Again, with, you know, tinkering a bit with the business, finding the levers to pull to be able to allow the business to sort of maximize its growth.
From a more macro perspective, you know, your analysis, what is the current climate for PE and how does it compare to the past couple of years?
I think again, it's interesting. You look at sort of what, you know, what's happened today and the story of Europe, which is, you know, seemingly changes by the week, but ultimately ends up sort of being negative pull on the market. From a PE perspective, very active, looking for businesses. The lever that sort of, you know, affected them the most over the last, you know, couple of months has been financing. So you know, somewhat of an issue around whether we can get financing and at what rate. Clearly, interest rates have gone up on leveraged buyouts, and that's been a concern and impacts the volume of deals getting done. But there's a hope out there that financing markets will settle at some point, even in a slow growth environment, that private equity still feel comfortable investing. That's really the developed market situation. In the emerging markets, it's sort of the opposite, where there's a lot of money piling into the emerging markets, driven up prices. There's some structural issues, I think, in some of those economies. But from a long-term perspective, private equity looks at it and says, we got to get in this market and capitalize on, you know, the trends that are positive, and they go across a number of sectors. So you have this sort of two different models out there that private equity is pursuing, and there's challenges in each. But I think they look at them and say there's growth in each one of those areas. We just have to have, you know, certain things like in a developed market, you've got to have financing there. Overseas, you got to find the right opportunities, and a lot of these deals are minorities, so you got to find the right local partner. Don't necessarily have the financing challenges there because most of the deals are growth equity at this point. But you know, you continue to see sort of this, you know, two different models. And we talked about two-speed sort of economies out there, and I think, but private equity looks at it and says across the globe, we see great opportunities here.
That's great. You know, it's been touched on in some of the panels yesterday, but the benefits for an entrepreneur, if I'm a management team and I'm looking at my options, and one option is an IPO, becoming a quarterly thinking,
Right.
versus PE. Can you talk a little bit about the benefits that PE offers that's different than an IPO?
Sure. I think from a PE perspective, well, one, you don't have, you know, when you become a public company, you have to adhere to, you know, all the rituals of being a public company.
Mm-hmm.
So it's, you know, it's a whole exercise in terms of financial reporting. It's a whole exercise in terms of dealing with investors. It's a whole exercise in terms of, you know, concentrating on making the numbers. And, you know, to contrast that with a PE situation, it's not like there's not pressure to make numbers, but it's not quarter to quarter. It doesn't consume the company in terms of making sure, you know, let's focus on the next quarter. It's let's look at 3 to 5 years out. Let's look at this business where it is today, where it should be or could be 3 to 5 years from now, and let's do everything we can to go down that path and take management teams and be patient with the management teams. I think, you know, people would say private equity is patient capital. I'm not sure it's patient if you know these guys. I mean, they're not patient, if you will, but they tend to look at a 3 to 5 year window and say, let's do everything we can within that period, because we know at the end of the day, we can get to a certain level of growth and the business will look like this and we can exit. And you know, the other piece to this is they're aligned. So private equity and management teams are typically aligned around performance of equity. And you have that in a public domain as well. But again, it tends to be more focused around, you're not really necessarily partnering with your shareholders.
Right.
I mean, this is a PE fund partnering with the management team and doing everything they can to maximize growth.
Yeah, it seems much more methodical in terms of its approach. Jeff,
Yeah, and PE tends to also add these other elements as well,
Yeah.
where your shareholders are not there. I mean, they're represented by the board, and the board in some ways helps, but you know, it's not the same sort of rigor that you find in a private equity setting, where the private equity deal professionals as well as the board are laser focused on just helping this management team grow the business.
How often are organizations that have multiple companies within their portfolios tapping into the expertise of those other management teams to help a single portfolio company within it?
It's an interesting question, and some have done it more rigorously than others. I'm hearing a lot more of the PE funds are bringing together their management teams so they can sit in a room together and talk about what works and what doesn't, and share, you know, different, you know, stories, if you will, and going through operations reviews together as opposed to separate, so that everyone can benefit from it, and not that everyone's going to go in and be viewed the same. One size doesn't fit all in these situations, but again, there's a lot to learn. And I think what you find is these funds are getting of size now, where they have a number of investments that they have to, you know, manage from their perspective, a number of management teams across different industry sectors. It's just a lot more difficult for them to sort of come together, where they used to be in a lot of ways sort of, you know, small family, you know, sort of like family-owned type businesses, to now they're sort of larger institutions. And it is a challenge within the institution to make sure everyone sort of can come together and can benefit from, in essence, working for the same company.
Definitely an interesting field. Jeff, thank you very much for your time.
Appreciate it. Thanks.
Great answers.